Yes,
Yes,
sir.
sir. Yes, sorry. Okay, with the busy schedule, we have start the session. So the thing is, last class we have discussed the incomplete record. So in very first, we have to discuss the incomplete record things. Then we have to discuss how to calculate the capital. So you know about in the incomplete record means there is a single entry. There is no proper double entry system. So we have to change the single entry system into double entry system. Then we have to prepare the financial statement as well as now and then we have to prepare the statement of capital. Capital means we have to calculate the capital when assets and liabilities are given. First we have to identify the capital. First two examples are there. Third one, we have to calculate, we have to prepare the financial statement, income statement and statement of financial position. So for that purpose, the question is given some data, summary of the bank account and assets and liability, and some other informations are given. So according to that one, we have to prepare the income statement and also statement of financial position. For this purpose, we have to prepare some ledgers and statements. Receivable account. Then here rate receivable account. Uh, I think you can see my screen. First, you have to draw the ledgers and statement. After that, we have to enter one by one. Did you understand? First, we have to prepare the ledgers. So you have to draw like these ledgers: trade receivable account, trade payable account, rent and local tax account, insurance account, motor van account, sales on motor van account. And also we have to prepare the capital, statement of capital. So we have to calculate the capital. For that purpose, we have to prepare the statement for calculating the capital. So please, first you have to copy this one. After that, we have to enter one by one. So I will give 2 minutes. You have to copy these ledgers first. copy. So first you have to don't write down inside data. So first you have to draw the ledgers and this statement. After that, we will so next you have to prepare the income statement. So like income statement like this, as well as statement of financial position like this. Just you have to write down. For the August 2023. So like this. First you have to put the heading. Later one by one we will see. Okay, we will see one by one. So I think you have the question. You have the question. So according to that question, we will do. The first thing is MC data wholesale fruit and vegetable merchant does not keep a full set of accounts record. So the accounting record they have to not full because they have to prepare just some accounts. However, the following information has been produced from the business records. So first, the bank summary is given. So bank summary is given. So you have to enter the data from the bank. So what is the balance? Balance is it is the opening balance. First one is, I highlighted one. First one is the opening balance. So opening balance is 1,970. So it is a cash balance as a bank balance. So in the opening balance, cash balance 1,970. So in the calculation of the statement of sorry, not here. So in the calculation of capital, you have to calculate the capital now. So in the workings, opening balance 1,970 in the capital at 31st September 2003. You want to calculate the capital. Therefore, the opening balance is the asset. In the opening asset as a balance 1,970. What about second one? Second one, cash from rate receivable. Cash from rate receivable means, so you have to receive the cash. Therefore, cash account, bank account debit, receivable account credit. So, receivable account credit, cash. Receivable account credit, cash. Therefore, in the ledger of the rate receivable, receivable account, cash. So, cash account debit, receivable account credit. Okay. Next one, sales of private yacht. So, the sales of private yacht means, so it is an income, no? It is an income. So, it is a other income or it is other income.
No.
What is that? Sales of yacht?
Capital.
It's a capital. Sales of private yacht. Okay, we will see. One by one, we will see. What about the sales of motor van? Sales of motor van means they have sell the motor van. So cash account, bank account, debit. Sales of motor van account, credit. Sales of motor van account, credit. Therefore, the sales of motor van, cash, credit. 2,100. Sales of motor van. Next one, what is that? Payment to suppliers. What is the double entry for the payment to suppliers? When you are paying the suppliers, suppliers account, rate payable account debit, bank account credit. Here, bank account credit, rate payable or suppliers account debit. So here, payment to suppliers in the rate payable ledger is debit. So, dear students, can you understand my teaching? Or otherwise, can you understand? If you have any queries, you can ask. Students, please talk. Understand. Okay, good. So what about next one? Purchase of motor van. So the purchase of motor van means you have to purchase the motor van. You have to purchase the assets. So motor van account debit, cash account, no bank account credit. Motor van account debit, bank account credit. Purchase of motor van. So here, what is this is the what is that? So you can put the motor van. Okay, we will see later. There are some workings are there. We will see later that one also. Okay, purchase of motor van. I am not taken. Okay, rent and local tax. So this is paid. So rent and local tax account debit, bank account credit. Rent and local tax account debit, bank account credit. So you have to put the double entry. So here you can put cash or bank. Okay. Then wages also 15,100. Wages also 15,100. So here, I think there is no wages account. So it is totally transferred to the income statement. I think income statement, wages, 15,100. 15,500. I think there is no adjustments in the wages. So it is transferred to the, normally transferred to the income statement. without any adjustment. Normally, the amount of pages 15,100 paid by cash. So it is transferred to the income statement. Then motor vehicle expenses. What do you mean by motor vehicle expenses? Motor vehicle expenses, it is a expense. So therefore, motor vehicle expenses account debit, bank account credit. So here, the motor vehicle expense, it is a expense. So it is totally transferred to the income statement. Motor vehicle expenses under the expenses 3,350. Okay. What about next one? Next one is the postage and stationery. So it is a expense paid by cash 1,360. So therefore you have to enter postage and stationery account debit, bank account credit. So the postage and stationery account without any adjustment. So it is transferred to the income statement. Total amount transferred to the income statement without any adjustment. So we have to transfer the postage and stationery in the income statement 1,360. Next one, drawings. What do you mean by drawings? Drawings means, so it is taken by the owner, the cash taken by the owner. So drawings account debit, cash account or bank account credit. So what is the transferring entry to the cash drawing? Cash drawing? Anyone? What about the entry for the drawings? Cash or bank? So the cash account debit, credit, drawings account debit, drawing account debit, cash account credit. So drawing account, cash drawing transfer to where? So it is deducted from capital. It is deducted from end of the capital because 9,200. Okay, drawings is a cash drawing. Cash drawing. So when you are looking at the, do you remember the accounting equation? So the owner drawing cash, automatically cash account cash will be deducted and also equity or capital will be deducted. So therefore the cash drawing deducted from the capital. So under the capital and liability, you have to deduct drawings. So next one, repair and renewal. So it is a expense. So repair and renewal account debit, cash account credit. So repair and renewal is an expenses. It is transferred to the income statement. So therefore, repair and renewal 650. So in the income statement, I say expenses, repair and renewal 650. Then insurance. What do you mean by insurance? Insurance also expense. So any here given no insurance. So we will so we have put in the we have prepare the ledgers of insurance account. So what is the journal entry? Cash account credit, insurance account debit. So insurance account debit. So here insurance account debit cash 800. Did you understand? Yes, if you have any queries, you can ask. No problem, you can ask. No. Okay, what about next one? The closing balance. The closing balance means it is the bank balance or cash balance. The closing balance transferred to the where? Transfer to the statement of financial position at the end of the year. At the end of the year, Statement of financial position, cash. Current asset, cash. So the balance 2010. Did you understand? First, we have to transfer the bank account. Bank account. There are some adjustments are there. So we have to transfer someone into the ledgers. Now, the assets and liability other than bank, some others are given. So we have to transfer this one. So opening and closings are given. So here, someone are transferred to ledgers, someone transferred to opening calculation of the capital, others are transferred to statement of financial position at the end of the year. Okay. So first, the opening balance rate payable. So the rate payable opening balance 4,700. So it is transferred to trade payable ledger. So trade payable is the credit balance 4,700. At the same time, rate payable for the calculation of the capital, trade payable 4,700. Did you understand? The opening balance transfer to the trade payable ledger and also calculation of the capital. Trade payable 4,700. Then closing balance 2,590. So it is the trade payable closing balance 2,900, sorry, 2,590. 2,590. And also it is transferred to the closing statement of financial position, trade payable 2,590. So the opening balance also transfer, ledgers and calculation of the capital, as well as closing balance also transfer, ledger closing balance, as well as the year-end financial position. Okay, so like that, trade receivable also 7,320, 9,500. So opening rate receivable in the opening balance in the ledger as well as opening balance in the 320 and also closing balance 9,500. So trade receivable, closing balance, carry down balance 9,500 and also the statement of financial position, closing balance 9,500. Here we have put there are some adjustments are there. Therefore, I have put in the bracket 9,500. Next one, rent and local taxes accrued. Accrued mean it is a liability, opening liability as well as closing liability. So the accrued is a liability. Therefore, rent and local tax ledger, rent and local tax ledger, the balance, it is a liability opening balance, then closing balance 260, opening balance 200. Therefore, for the calculation of the capital, accrual of rent and local tax 200 as well as the closing accrued transferred to the statement of financial position accruals under the current liability. Under the current liability, accrual 260. Okay. So anything else up to now? We have discussed something. If you have any queries up to now, you can ask. Students, if you have any queries, you can ask up to now what we have discussed. I will ask question. Okay. So what about next one? Motor van. Motor van, the constant accumulated depreciations are given. So in the opening cost and opening accumulated depreciations are given. One is motor van. One is Yamaha, other one is FZ 2022. So first one is the cost. So cost of the motor van cost, therefore 10,000. 10,000, accumulated depreciation 8,000. So accumulated depreciation 8,000. So here the motor van, when you are calculating the motor van, so the motor van as an asset in the opening, 10,000 minus 8,000 accumulated depreciation, 2,000 net book value for the calculation of the capital. So the motor van opening balance 10,000. It is also transferred to the calculation of the capital. So the accumulated depreciation 8,000 also given. So from the cost of the motor vehicle 10,000, you have to deduct 8,000 of the accumulated depreciation from the balance. So the net value of the motor vehicle 2,000. Next, FZ. FZ 13,000. So it is the closing balance. So therefore, you have to put in the statement of financial position. Yes. FZ, we have to. So we will see later on this one. There are some thing. Inventory. Check the inventory. So inventory is the opening inventory as well as closing inventory. So opening inventory transfer to the income statement as well as calculation of the capital. So the opening inventory 4,900. Therefore, income statement opening inventory 4,900. Okay. Opening inventory transfer to the calculation of the capital. Opening item inventory 4,900 and also income statement as a opening inventory 4,900. What about the closing inventory? Closing inventory 5,900. So therefore, the closing inventory transferred to the income statement as well as statement of financial position. 5,900 you have to less in the income statement and also closing inventory in the statement of financial position 5,009. Okay, so each and every one transferred to as the double entry system. Okay. What about next one? Insurance prepaid. Insurance prepaid is a asset. So opening asset as well as closing asset. So insurance prepaid. So therefore insurance account in the ledger of insurance opening balance 160. At the same time calculation of the capital opening insurance prepaid 160. And also closing balance 2,200. So the prepaid insurance, the closing balance as an asset. So it is transferred to the statement of financial position. Prepayment, how much? 200. Prepayment not 200. How much? Oh, 200. So okay, 160 opening. 160 opening, 200 close. What about next one? So all receipts are bank and all payments are made from the bank. Therefore, already we have tender. So we will see later these things. Now we will move to the thing. the trade debt 300 owning by James and included trade receivable 31st August. See the B above in the written of irrecoverable debt. So here the 300. 300 is a bad debt, irrecoverable debt. 300. So it is an expense. So it is an expense in the statement of income, recoverable debt. How much? 300. So it is an expense, recoverable debt or bad debt. So 300, it is an expense. It is transferred to the income statement. And also it is deducted from the receivable. It is deducted from the receivable. Therefore, the total receivable, closing receivable 9,500, and you have to deduct the 300 irrecoverable debt. So the net amount 9,200. So recoverable debt. So irrecoverable debt means, so it is an expense. So it is put into the income statement as an expenses irrecoverable debt, and also it is deduct from the receivable at the end of the year. So therefore, in the statement of financial position, in the receivable, you have to deduct the 300. So MC data provide the depreciation at 20% on cost of motor van held at end of the each financial. No depreciation provided in the year of sales or disposal of van. So the thing is the depreciation. The depreciation calculated 20%. The depreciation calculated for 20%, and also the depreciation not provided. There is no depreciation calculated for the sales or disposal motor van. So you have to not consider, you cannot, you not consider the depreciation for the sales motor vehicle or van. Okay. So here the motor van. Here you can see sales of motor van 2,100. No, here sales of motor van 2,001. So I think the sales of motor van 10,000 sold, because the motor van is 10,000. So it is sales of motor van 10,000. Therefore, the journal entry sales of motor van account will be sales of motor van account debit and motor van account credit. So you have to cancel the motor van account. Therefore, the sales of motor van account debit 10,000, motor van account credit 10,000. Okay. So the here the motor van depreciation. So here the motor van depreciation 8,000 is given. Okay, there is no calculation for the current year depreciation. Therefore, you have to deduct the accumulated depreciation for the past years. In opening, accumulated depreciation 8,000. You have to, so there is a double entry. What is the double entry for accumulated depreciation transfer to the sales of motor vehicle, motor van? So already accumulated depreciation is the credit balance. So you have to transfer the accumulated depreciation in the disposal or sales of motor van. So accumulated depreciation account debit, accumulated depreciation account debit, motor sales of motor van account credit. Accumulated depreciation account debit 8,000, sales of motor van account credit 8,000. So now you have to complete the sales of motor van. sales of motor van. So if you are balancing the credit side balance 10,100, credit side balance 10,100. So you have to find out the profit on sales of motor vehicle. So it is a debit balance. So the accumulated depreciation and cash 10,100. The motor van cost 10,000. Therefore, the profit on sales of motor van 100. So it is a other income. So it is an income statement. The sales of motor van 100. It is 100. Did you understand? So here you can see the motor van. So it is a new motor van. The new motor van purchase. New motor van purchase at cost 13,000. So in the statement of financial position, the motor van 13,000 as well as the 13,000 depreciated by 20 percentage. So it is 2,600. 2,600 depreciation for the year. So therefore, net amount 10,400. So the newly motor van purchase in the year. So 13,000 is the cost. Therefore, the 20 percentage of depreciation. So the depreciation is 2,600. Therefore, so you have to deduct the 13,000 minus 2,600. Net book value 10,400. This depreciation called as an expense. So it is in the expenses under the income statement. Motor vehicle depreciation 2,600. Motor vehicle depreciation 2,600. Did you understand? Okay. Next one. Discount received during the year for rate payable 1,100. What is the journal entry for discount received? Discount received is an income. So, rate payable account debit, discount received account credit. Rate payable account debit. Trade payable account debit, discount account credit. So discount account, discount received account is an expenses. So it is transferred to the income statement as an income. Discount received. Discount received 1,100. Okay. What about next one? Other things are closed. So we want to see this one. This one also completed. This one also completed. What do you mean by sales of private yacht? So we will see purchase of, this is the purchase of motor van. So it is comes under the purchase of motor van. So it is okay because this 30,000 as the new van. So already we have calculated the depreciation 20 percentage, 2,600 transferred to asset depreciation and also depreciation transferred to the income statement. This is the sales of private yacht. So it is a other income. So it is added in the capital because it is a private yacht. So it is sales of private yacht means it is add with the capital 20,000. Okay, sales of private yacht add with the capital at the end of the financial year. Okay, that is also done. That is also done. So almost done. So now our task is to balance it. So here one by one we will see the rate receivable. Rate receivable, debit side is the highest balance. Therefore, debit side is the highest balance. 105,500. So the balance amount you have to see the sales. Sales is 98,100. Did you understand? So already the opening balance, closing balance, cash amount are fine. So now we will find out the balancing figure. Here the balancing figure in the debit side called as a sale. If you are balancing, credit side is the highest 105,500. So in the debit side also transfer 105,500. So the sales is the balance amount 98,108. So sales transfer to the income statement, sales 98,108. Okay. So we have to balance the trade receivable account. Already we have balance. Now we will move to the trade payable. Trade payable balance, opening and closing balance are dip. Discount received in the debit side, payment to suppliers in the debit side. Therefore, the highest amount means in the debit side 75,690. So the purchase is the balancing figure in the credit side. So the rate payable purchase 17,909. So the purchase 17,990 transfer to the income statement purchase 17,990 and local tax account. So when we are balancing the local tax account, so the debit side is the highest balance 2,860. So 2,860. Then it is transferred the 2,660. 2,660 transferred to the income statement for the year. For the year, amount is 2,660. So it is transferred to the income statement. So rent and what is that? Rent and local tax. Rent and local tax 2,660. And also next one, insurance. So insurance also done. So the opening, closing balance and cash are done. And also the balancing figure transferred to the income statement. So the income statement 760. So 760 is the closing balance. So insurance transfer to income statement. Insurance 760. Insurance as an expense. Then other things are done. For motor van also done. So motor van account balance. So now we want to calculate the capital. So the capital, the total opening assets minus total liability. Okay. So the total assets 16,350, total liability 4,900. Therefore, capital 11,450, the opening capital. So the opening asset 6,350, total liability 4,900. Therefore, the capital 11,450 transferred to the statement of financial position at the end of the year as a capital 11,450. Did you understand? Now we have to complete the ledgers and find out the capital. Okay. Now we have to move to the income statement and balance the income statement. So the profit, gross profit. Now you can balance other income 1,200. So Total expenses 26,780. So gross profit plus other income less other expenses. So the net profit 2,610. Net profit 2,610. So net profit transfer to the statement of financial position 2,610. Now we have to balance the statement of financial position. So the total assets, motor van, net amount 10,400, current assets are 17,310. Therefore, the total assets 28,100. So with the capital, you have to add the net profit and sales of vehicle yard, private yard, sales of private yard. So you have to add less the drawings, and the balance of the capital at the end of the year, end of the financial year, 24,860. And also total current liabilities are 2,850. Therefore, total liability 27,000, total capital and liability 27,710. Okay, so now total assets and equal to the total liability. So it is done. So any doubt or any queries you can ask now. I will give 5 minutes. You can ask any doubt and queries in this question. So we have completed successfully one question.
Sir,
Yes.
why we at the sale of private yard in capital, sir?
So the sales of private yard mean it is a owner's asset. So it is a owner's asset. We assume that we cannot be considered for the business transaction. So we assume the owner's private thing as a capital, the sales of private yard. So the particular private yard sold and the amount deposited in the bank. Therefore, it is assumed as a capital. It's assumed as an additional capital. Okay. So sales of yard means already is given. So there is no opening or closing balance in the yard. Therefore, it is a private, it is a owner's one. So the owner's one sales and deposited in the bank account. Therefore, we assume that it is the additional capital of the business. Okay. So the private yard. Anything else?
Thank you.
Okay. Anything else? Students, anything else? Okay. So you understood. So other thing is the next question. The following information was extracted from the books of Taj Cafeteria, a catering service business owned by Ritik. Assets and liabilities are given, opening and closing, payments are given, other additional informations are given. This is a small question. So you have to prepare the statement of income at the end of the year as well as financial position as at 31st 2023. So I will give I think we will take 5 minutes break. Then we will start. Okay. So you will relax, take in 5 minutes. Then after 5 minutes, we will start. Okay, shall we start? We have to prepare these ledgers. So first we have to prepare the rate receivable ledger, rate payable ledger, cash book, and the capital. So what is the question? So the following information was extracted charge cafeteria. So assets and liability payments for the year given. So here you have to identify the capital. You have to find out the capital. As well as here some payments are given. What about the cash balance is given or not? Cash in hand also given. Cash in hand also given. Okay. So all purchase and sales are credit basis. Decided sales price of cafeteria keeps a gross profit 50% on cost. Equipment 5 million. Set for 3 years. However, the investment. Okay, withdraw 50,000. So here we have to find out the sales, purchase, and all the things, as well as here there are some expenses. Okay, so we have to prepare here. So you have to prepare the ledgers of trade receivable, ledgers of trade payable. You have to copy, yeah, copy these things, and cash book, capital. Just go after that. You have to write down. Just row the lines. Trade receivable account, trade payable account, cash account, capital account. So you have to draw the income statement of Taj Cafeteria and statement of financial position of the Taj Cafeteria. One by one, we will see the carrying catering equipment. So you have to transfer to the catering equipment. This is a different question. Sorry, yeah, it is a different question. So students, can you hear me?
Yes, sir.
Yes. So you have to practice this question. The question is already we did. So second question, you can practice and come with answer in the next class. I also explain this question. Okay. Example 4. And also I will upload some questions for your practice. So you have to practice that one. So I will give the answer to this one next class. Huh? So, so you have to practice this question, and also we will meet on next class. So tomorrow we have the lectures or not? Students, tomorrow what about our time? We have or not? Irfan, I is in online. Tomorrow Wednesday, no? Wednesday morning we have 8:30. So we will. So 9:30. Do you have any lectures, students? I is in online.
Yes, sir.
Yes. What about tomorrow 8:30, 9:30? Do you have any lectures?
9:30 is entrepreneurship development, sir.
Sorry, I couldn't hear. 9:30. So otherwise, we will put 7:30 to 8:30. Yes, I see. Okay. Entrepreneurship, no? So we will take 7:30 to 9:30. Okay, tomorrow we will take 7:30 to 9:30. So you will practice this question. Okay, you will practice this question and find out the answer and come with next class. Okay. Okay, I will wind up the session now. Other thing is, please apply your examination. Already I sent the message. I share the message in the WhatsApp to the through the representative. So when you enter into the university, first you have to apply the. Otherwise, I will send the Google form. Hmm? So the lectures 7:30. Yeah, 7:30 to 9:30. Our lectures tomorrow morning. Okay, 7:30 to 9:30. Okay. Okay, thank you very much. We will meet on tomorrow. Thank you.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.